Good morning, everybody. This is Todd with the Forex Nitty Gritty Insiders daily video. Hope you're having a fabulous day today, and hope the market is treating you well. We do have a market today that's going to be impacted by the FOMC that is coming out. And as you know, the FOMC can be something of a volatility increaser. And in fact, a lot of people, when they are trading during the time of the FOMC, they decide to take a break, step back, before and after, to make sure that they don't get caught in the crossfires, so to speak, of that. And so as we look at this, it's coming out at about 12:30 Eastern Time, followed by the press conference at 2:15. And so that is going to be something that a lot of people are going to be interested in looking at. So I would not get too concerned about it from the standpoint that we can avoid the issues by not trading it. But if we have positions, sometimes that can cause us a little bit of nervousness in our trading. And so just keep that in mind as you are looking at the markets and what you're going to be doing and in your trades. Now, of course, with the simple trading method, we're looking at things like trends. We're looking at things like support and resistance. We're looking at the highest high of the last three or the lowest low of the last three, depending upon what we're looking at. So this is an example here. This is a 15-minute chart of the Euro-US dollar. And I'm going to just put onto here a moving average. I'll use a 40-period simple moving average. And you can see that this has been mostly in an uptrend. There's some times where it's been flat or moving down, and that's just normal for what the market does. But what we're looking for with the simple trading method are opportunities to trade in the direction of the trend after the market pulls back to some type of a support area. So here's an example of something that we would consider an entry point. This red line here, you can see that the trend is moving up, and then we had a pullback back down, and then we moved up above the HH3. So that is what we're looking for. Now, if we go back, and you can spend time going through this, you can look for other times where you would have had entry points. Now, once we get into a trade, then we have to put our stop loss in, which is just going to be below the most recent low to keep us out of the trade in case it goes against us. And then we're going to look at a target, past highs, whatever it might be, in order to know that it's okay to get out at that point. What we don't want to do is hold on to a trade too long. Simple trading method is a fairly quick trade where we're looking to capture that movement as it begins to move in the direction of the trend. And if we can remember that, regardless of the time period, we can look for opportunities to take trades and take advantage of those moves that occur when it's setting up properly for the simple trading method. Now, we've had a lot of good movements here over the past couple of days, and so we need to keep that in mind so that we don't get caught in the fact that it's been trending and get caught in at the top of a move. And so watch for signs that the market is going to settle down, and then change directions or start to look for other things. But for today, just remember the volatility with the FOMC. Watch it as it comes out at about 12:30 Eastern time, and we will be back tomorrow to kind of look and see what happens because of that. So take care, and we'll talk to everybody tomorrow.